Both an art and a science, valuations are complex things and their impact is enormous, making the difference between generational wealth creation and a comfortable retirement. At bizval, we know how tough it is to grow and run a business, which is exactly why we've made valuations simpler. Whether you are using our online tool bizval Live or reaching out to us for a concierge offering where we spend more time on your numbers and your business and give you detailed feedback, you can be sure that the same techniques being used by professional investors are also being used by us. And with bizval Bootcamp, we will prepare you for those discussions with investors. Welcome to the bizval podcast. Welcome to this episode of the bizval podcast. My name is the Finance Ghost, the host of the bizval podcast, as you've come to know. And today we are now going across to France. We have been hanging out a little bit in the UK recently. David Duchemin, hope I got that right. My French is coming along. I was learning a bit of Scottish last week, which isn't quite English. I think it's almost a different language. You've got to concentrate very hard on Scottish pronunciation. But David, you're the founder of 2A Family Office Network. It's really cool to engage with you. I think before we kick off, other than just welcoming you to the show, it would be great for our listeners to just understand a little bit about you. Where in the world are you? What have you done? And what is it that you are currently busy with?
Yeah, thank you for having me on your podcast. It's a pleasure. And your French is good. That's all fine. So, I don't come from the world of the family office network originally. I spent a couple of years, 15 years or so in the self-development industry, doing business coaching, doing Tony Robbins-like seminars on motivation, leadership mastery. And at some point, going through Tony's stuff myself, going through his seminar, Wealth Mastery, that was for me the turning point where I decided to start learning how to invest. But not only that, learning also how to manage the wealth you're creating along the way and how to pass it on to the next generation. And that was for me, the concept of family money was, a breakthrough for me. And this is now, I would say, my purpose, creating a family office for the next generation and creating wealth just for the sole purpose to pass it on the next generation. And I spent the last 4 or 5 years or so building a network of family offices and asset managers. And I'm now in this institutional world of money, I would say, yeah.
Yeah, it's very much about building legacies, right? And the families that you work with would typically be, have very high net worth individuals, I would imagine. I think some people understand exactly what a family office is. I think a lot of people don't. And a family office is something very different actually to a corporate or even to an institutional asset manager, in my experience. I think it would be very interesting to understand, directly from you with all the experience you have in this space, what exactly is a family office? And then how is that different to your kind of typical corporate, not just in terms of structure, but also how they actually behave every day?
Yeah, no, sure. It's a broad topic. And we're talking about, we're talking about multi-family office, single family office, and now we are even talking about virtual family office. And basically what a family office is a kind of private organization, a private entity which will manage the wealth of one family or several families. So you have to make a distinction. You have to distinguish, multi-family office who are solely advisors coming together to sell services to these families, high net worth individuals, like tax services, wealth management, investment management, even lifestyle services to manage to help these individuals manage their lifestyle or their private gadgets like private airplane or that kind of stuff. So sometimes you have people only doing managing these things. But my point would be, of course, that, and you're talking to all these kind of people, entrepreneurs, and my point would be for all these people to think of a family office like a basis for them, a foundation for them. Every entrepreneur should start at some point his own family office, because people get stuck sometimes with the structure. I don't have the time, I don't have the resources, I don't have the money to start my family office. This is something out of my reach. But family office is for me not so much a structure, but it is a culture. So you have to start this culture to say, okay, I'm building my company, my startup, to generate wealth, to generate an exit at some point. And this will be hopefully very rewarding for you guys to have this kind of experience. But you have to think right off the bat that you have two businesses. One is your startups, the company you're funding, and the other one is your family office. And you have to create this mindset, this culture inside your family. And as you rightly said at the beginning, it's all about the purpose of a family office is about legacies, about passing on the wealth to the next generation and to the next generation. So it's really, and we could go into very into depths with family office, because you have hard structure, you have soft structure. So hard structure is obviously you will set up a company somewhere in a jurisdiction. Maybe we will be talking about a trust to protect the assets. So this is all what a lawyer, what people will advise you to do. But you can start a young founder. You can start only with I would say the mindset and the soft structure. So soft structure for me is a kind of agreement, a family agreement, where you start setting up the stage for your family office, where you start. So it's a way to get your family members involved into this. The kids, you start with the first generation, obviously, and setting up the stage means preparing for the next generation. So you will have an investment council inside the family. You will have an investment bank. So this is all the soft structures that will come along the way, that you don't really need now when you're starting, but that you are preparing for the next for the years ahead. Does that make sense?
Yeah, it does. I mean, so much of it is capital growth and preservation, and thinking about the right ways to do that, and thinking about the right behaviors within this sort of family structure that is designed to not just take a windfall of profits and then go and spend it on something. And as you pointed out there, family office does not mean just saving all your money. Clearly, we joke in South Africa, I don't know if this joke travels well, but we talk about first world problems. First world problem is, who's going to clean my yacht? Or, oh no, my airplane is at the wrong airport. Or, I can't go to the Monaco Grand Prix this year. I didn't get tickets in time. I mean, this is a completely different lifestyle to anything that most people can remotely relate to. I think all that happens is your personal admin just changes. You're not worrying about doing the change of ownership on your motor car you recently bought. You're worrying about who's cleaning your yacht. But you still have these things that need to happen. And that's obviously one element of family office. But I think what's more, I suppose, relevant to, a lot of the listeners of the show perhaps is stuff like, obviously from a founder's perspective, it's thinking about how do you go and get these structures in place? How do you actually go and build out a family office, especially if you're looking to exit a business? There's also another angle to it, which is to say, if you are looking to sell a business, don't discount the potential for a family office to be your investor or your exit, because these offices are looking for investments ultimately. And I'd be interested to hear your experience with this. Mine has certainly been that family offices don't always apply purely financial metrics to something. There's often an element of social impact metrics, depending on just how wealthy that family office actually is. Sometimes, it's going to sound ridiculous, but there are these sort of glamorous assets that they want to own and be associated with. They are businesses, but they probably don't give a great return. I think sports teams would be a perfect example of that kind of thing. Just any thoughts from your side around family offices as investors and how they think about the world?
No, yeah, right. No, yeah, it could be partnering with the right family could be really a great value when you are raising money for your startup. But there is as many stages as there are families. So financial metrics is one thing, and you have some family offices which are really big families who have a setup where they have chief investment officers, they have VC analysts. So it will be much like a corporate investor. They will have their own due diligence process. They will have their own investment thesis. Focusing on sectors, on stages, things like that. And you will have, I would say, the little family offices, guys who are also relying on their intuition. Due diligence, of course, is one aspect, but if you have on your cap table a big VC with a big name, the guys are already happy with that, so they don't need much more due diligence to do. And they can do a deal with a handshake. So some are really old school. They have to meet you face to face and have this feeling, and that's also why it's really important for a founder to have this talent to express his vision, his vivid vision, because this is what they are looking for. How can you shares this excitement about what you're trying to achieve with your company. So it's really depending, but I would say, yes, these people are really keen on doing something great with the money. So all the social impact ventures are interesting topics for them. But they won't see an investment through, the eye of what are the social impact, what are the social metrics. They will see, a green tech project or ag tech or health tech or green chemistry, or, does your project move the needle? Does that do something good for the world? And this is a drive of doing something good with my money, which is here more relevant, I would say. I see asset managers, it's another topic, but I see sometimes asset managers trying to promote a product, investment product like bonds through the financial social metrics angle. And here, that works sometimes, but what they are looking for is, what is the core strengths of the projects and what is a return on investment. But it's now coming back to a startup project. It is really doing good. I will invest into your startup, and you have a tech which is really disrupting, which moves the needle, which can do good for humanity. And this is a drive behind the investment, I would say.
I mean, you touched on such an interesting point there with those bonds, right? I mean, ESG, we know, is French for nonsense. Now, I'm obviously being very cheeky now. But the point is, this entire ecosystem has been built up around this concept of ESG and these green bonds. And sometimes it gets used the way it should. Look, I am fairly cynical of corporates on a good day. I used to work in investment banking myself. I know for a fact that the vast majority of these things are, there is cheaper money available. Okay, what do we need to do to get it? Altruism is unfortunately a very rare trait in humanity, sadly. So, and that's fine. That's how the system works. That's why the money has these metrics, because then at least the people with the money know, okay, well, whether those people are sincere about it or not, at least they have to do this to get this money. And that's fine. I think with a family office, it's a bit different because, again, they are not reporting to their own funders, for example. They are not necessarily interested in the same ESG metrics that an investment bank will look at. That's very much a tick box exercise. I think a lot of this stuff, and it's cool that you've touched on that, is I love that point, Ron. Like, will it really move the needle? Will this be a technology that actually makes a significant difference? And then inevitably, that's social enterprise, right? And it's actually a fascinating, it's a topic for another day entirely almost, but these businesses make money, but they do it through doing a social good. And it doesn't mean they're not valuable, and it doesn't mean they can't change hands for a lot of money. And it doesn't mean that they can't make their founder very wealthy. Inevitably, it just means that, the cap table looks different along the way. The strategy maybe looks different along the way. And I think in some cases, the goal is not to absolutely maximize profit and get that last bit of blood from the stone. I think the goal is to, be sustainable financially and then do something else that is also sustainable from an ESG perspective. It's a much purer application of that concept of ESG, I think, than what we see in the institutions, unfortunately. I don't know if you'd agree with that.
No, exactly. You're so right. You're so right. This is true. This is, and what I love. I'm talking with a lot of families, and when I see sometimes some founders of this kind of new startups with new tech doing good, these are families. They came across an engineer with a wonderful new tech, and they're putting the money on him and betting on him and going all in. And what I want to say is you feel the passion behind these families. We want to do good. We believe in the guys they met, the engineer with this new tech, and stories behind this kind of startups are fascinating.
Yeah, very much so. And I can understand why it appeals to a family office. They're also, let's call a spade, telling those stories around a nice meal in Switzerland somewhere. This is very cliche stuff, but there's a lot of truth in it. A perfect, very South African example is, or not that South African actually, is Remgro, so Johan Rupert, who Richemont, that's a name you'll probably know, and the the Mediterranean Shipping Company family putting their efforts together to acquire Mediclinic. So that's a very good example. Now, Remgro is a listed company. The Mediterranean Shipping Company is not, to my knowledge. And that's a very good example of how this family office, they don't want to put hospitals on boats necessarily. They just want to diversify. They want to invest alongside another very wealthy, successful entrepreneur, big name, big families. That's how this game works. And I think for founders, if they figure out how to tap into this source of capital, you can actually end up getting the best partner of your life, because you end up partnering with a family, and as long as you don't choose the mafia and end up in a movie somewhere, it can truly be the best decision you ever make. And I think something else I want to ask you that I've found is a lot of these family offices, they obviously don't have the same structure as a corporate. So they don't necessarily have an army of analysts and a board meeting and a quarterly meeting and a monthly Manco pack and all that kind of jazz. It's a little bit lower touch, isn't it, when they invest in a private company? They are somewhat more hands-off than an institutional investor might be.
Of course, it's they can act really fast. I'm right in the middle of a deal now with a European family investing in an Australian fintech. So the guy is, is okay to invest in a company, in a startup which is far away from him. And what is really important for him is to have this relationship with the founder. So face to face. But as soon as you have built this trust, they sign the contracts, they sign the term sheet very quickly. They send the money very quickly, and usually they have a level of involvement which is quite high, because they want you to succeed, and they are entrepreneurs themselves, so they know all the challenges you're going through as an entrepreneur, and they open up their own network to help you succeed in your venture. And they might also bring other families from the network into the project. So if you have the right family investor, the right guy on your cap table, so it can be really powerful for you. That's true.
Absolutely. So I think practically speaking, how do founders and family offices actually find each other? I mean, it sounds like that's something you're involved in. Is this generally by introduction? Or do people? I guess that's how it has to work, right?
Yes. You have a lot of events around family offices, so sometimes very costly. So all over the world, you have people or company organizing these kind of events, networking events. Sometimes they are seen as only pitch events, because these guys are selling you tickets and are selling companies the possibility to pitch their project to a crowd of family officers. So I met a lot of people who are not so happy with this kind of events, because it's only a pitch. And but it's a good way to start network with families. And you have, of course, different platforms, LinkedIn. And yeah, when I'm building my family office network, I'm going to these families with this idea in mind, that how can I help? How can I add value to them? Not with the idea, what can I take from them? Because when you are a founder, obviously you want to raise money, and but I'm not going to these guys with the idea of this startup I'm raising for this project. So, I'm just building relationship. And if you want to start building your network with families, start networking with these guys, you should see yourself as a family office as well, and you should go there into a networking activity with them, with this idea of how can I help? What can I bring to them which is of value? And that might be a connection to someone in your network. That might be your time, or that might be your expertise on something.
Fantastic. Last question my side, and then I think we're out of time today. You've already alluded to a family office that you're helping with a deal far away from home, still in Europe, but not on their back door. Are these kind of international deals common, and will you see something more exotic than that? Will you see a European family office investing outside of the EU, for example? Or do they tend to stick to what they know?
Yeah, no, it's not so common. And again, it's really there are as many strategies as there are families. So I remember a big US family wanting to invest. I think it was, if I remember right, it was in the Philippines, Southeast Asia, so really far away. And that was a big family. So they had chief investment officers. They had a setup somewhere in Dubai, to the investments. They had a due diligence team. So the guys were, they had the experience. They can do a deal everywhere on the world. So you have some families like this who have the kind of team, the kind of setup, and they can go everywhere. When we're talking about not so big families, under 1 billion. I see, especially here in Germany, Europe, France, the guys tend to stick to what they know. So they tend to stay at home and to invest in a company in the range of of a flight, companies they can visit very quickly. I even see families here in Germany saying, "Oh, I only invest in Germany." Not even Switzerland, not even Austria, because it's too far away already. So it's again a question of for some of them investment thesis, and also mindset, because I see other guys who say, "I don't care where the company is. I do care about the idea, and this is a team I invest in. So if that's a good investment opportunity, if that's 1,000 miles away, it's okay. It's not a problem. It's a different mindset. Yeah,
makes a world of sense. I love that reference to a smaller family office under 1 billion. I mean, that is exactly the point. So when people say family office, you need to understand you are dealing with properly high net worth individuals. This is not your neighbor who was a well-known surgeon and is sitting on, 50 million bucks. Yes, that's a lot of money. No one is saying it's not, but you need to understand what a family office actually looks like. David, this has been such an insightful conversation. How do people find you if they would like to reach out to you on this topic?
Oh, yeah. They can go on my website, 2afamilycapital.com. And 2A, that stands for, in French, we say amour and abundance. So love and abundance. That's what I want my family to strive for.
There we go. Love and abundance. I like it. David Duchemin, thank you so much for your time. This has been really great. I would encourage our listeners, if this is of interest to you, reach out, follow David. I'm sure there's some cool stuff on the website, and I'm sure you're open for a chat, especially where it's people who genuinely have a business reason for contacting you. So thank you, David. And to our bizval listeners, hope you enjoyed this podcast, and I hope you look forward to the next one from the Finance Coast. Thank you and cheers.
Thank you.